Welcome to Ahead of the Curve from K33 Research. Today is August 4th, 2026. If you want to explore the data behind today's discussion, you'll find the full report at k33.com/research. This week, the market looks almost asleep on the surface. Bitcoin has barely moved, trading volumes remain subdued, ETF flows are muted, and volatility is sitting near multi-year lows. But underneath that calm, several important signals are starting to emerge. On-chain activity has surged to its highest level this year following the Coldcard attacks. Strategy has quietly rebuilt a much stronger financial position, and Bitcoin's relationship with the Nasdaq is changing again. Those are the themes we'll focus on today. Let's start with the market itself. Bitcoin has delivered virtually no return over the past week. Spot volumes remain unusually low. ETF activity is sitting in the bottom 10% of observations since launch, and futures positioning continues to drift sideways. The result is one of the narrowest 30-day trading ranges we've seen in years. Over the past month, Bitcoin has traded within a range of just over 9%. Only a handful of days this decade have seen a tighter range. Normally, that would suggest there simply isn't much happening. But that's only true if you look at the price. On-chain activity tells a very different story. Nearly 890,000 Bitcoin moved over the past week, the highest reading this year. The timing strongly suggests the surge was driven by the Coldcard attacks, which reportedly affected more than 7,000 wallets and resulted in roughly 1,600 Bitcoin being stolen. Normally, periods of unusually high on-chain activity have repeatedly coincided with important turning points in the market. During sharp sell-offs, holders move coins as panic spreads. During strong rallies, profit-taking and fear of missing out drive activity higher. Panic leaves footprints on-chain, and that's why active supply remains one of the more interesting indicators to watch, even though the recent one was likely caused by security concerns rather than market momentum. At the same time, the relationship between Bitcoin and traditional markets is shifting. Volatility across technology stocks rose sharply last week, partly driven by the unwind of Leopold Aschenbrenner's situational awareness portfolio. Yet Bitcoin barely reacted. 30-day correlation with the Nasdaq has fallen to its lowest level since February, while Bitcoin volatility has compressed to levels normally associated with the later stages of bear markets. The market increasingly looks less like one waiting for macro news and more like one waiting for its own catalyst. Another interesting development comes from strategy. Earlier this summer, concerns grew that the company might eventually become a forced seller of Bitcoin if financial conditions deteriorated. That risk looks considerably smaller today. Strategy has rebuilt its US dollar reserves to around $4 billion. Giving it enough liquidity to cover dividend obligations until late 2028. That makes the company's financial position much more robust than it was only a few months ago. At the same time, the report highlights an important structural challenge. Strategy typically raises capital and buys Bitcoin when market conditions are strong, because that's when investor demand for its securities is highest. During weaker markets, the opposite can happen. The company may need to sell Bitcoin to support its preferred securities or strengthen its balance sheet. In other words, strategy risks becoming a buyer near market tops and a seller during periods of weakness. That isn't an immediate concern today, but it remains an important dynamic to understand when evaluating the company's long-term impact on Bitcoin markets. Looking across derivatives, the picture is largely unchanged. Funding rates continue to swing without establishing a clear directional bias. Open interest remains elevated, and implied volatility has fallen to fresh yearly lows. Similar combinations have often ended with liquidation squeezes once the market finally breaks out of prolonged consolidation. The data still doesn't tell us which direction that move will be. It simply suggests that calm markets rarely stay calm forever. To summarize, the biggest takeaway this week isn't that Bitcoin is quiet. It's that the market has become unusually disconnected from the amount of information arriving beneath the surface. Price, volatility, and volumes all suggest nothing is happening. On-chain data, corporate balance sheets, and market structure suggest the opposite. Periods like these can feel uneventful while you're in them, but they're often the ones that matter most once the next major move begins. Thank you for listening to Ahead of the Curve from K33 Research. Subscribe for weekly crypto market insights, and remember to visit k33.com/research for our latest analysis.